Priyanka, we are live.
Hello everyone, good evening and welcome to our Team Casa YouTube channel. So guys, in the continuation of all the webinars, today we have organized a webinar on IND-AS 38 that is related to intangibles. So today Mr. Vrishabh ji is with us, who will deliberate the today's webinar. And Vrishabh is a chartered accountant and he is associated with KPMG currently. He has been a speaker in most of the webinars related to IND-AS and accounting standards as organized by the Associate Students Conferences by viewers at ICI. So first of all, I would request Sumit sir to give some welcome remarks to the audience. And I also welcome Mr. Vrishabh to this webinar.
Thank you, Priyanka, for taking care of this webinar. And first of all, welcome Vrishabh ji in this IND-AS 2 day asset-based seminar. Especially, we are going to cover today intangible assets and tomorrow about property, plant, and equipments and investment property. So these three IND-AS are very important for the reporting entities who are reporting in IND-AS. सो आज के डेलिब्रेशन के लिए जैसा कि ऋषभ नागरानी जी की प्रोफाइल अभी प्रियंका जी ने बताई, ही इज वेरी लर्नेड पर्सन एंड बिलोंग फ्रॉम ए बिग फोर एंड हैविंग एक्सपीरियंस इन दिस फील्ड. So once again, welcome to you, and I request all viewers to please post your queries if any relating to this program. And once again, welcome to all viewers. And now I request Vrishabh ji to move further on technical session.
Right. So I hope I am visible and audible. Right.
Yes, you are visible and audible.
So my screen is visible. My PPT.
No, sir. Your screen is not visible yet. Now yes. It's visible.
Is it visible now?
Yes.
Okay. So first of all, I would like to thank Sumit sir for organizing these type of webinars. And so day in, day out, we listen that work from home concept, we are undergoing stay from home concept, but nobody is talking about learn from home concept. So this is more of a learn from home opportunity for us. So we can dedicate more of the time that earlier we used to dedicate in scrolling the social media or maybe the travel that we used to do. So this time we can dedicate for learning like this. So earlier we used to see that organizing CP webinars, you have to go to the branches, it requires a lot of travel. Now you get this on YouTube channel, so that is a very good opportunity. Now, as Sumit sir has mentioned that I belong to a big four, first of all, I want to give an insurance statement that nothing in this webinar that I am going to say is any statement of the company which I am working, so that is the KPMG. It is all my personal opinion and all my learnings that I have gained over the years from this accounting standard. So let us begin with the IND-AS 38 intangible assets. Now, this was notified under the Indian Companies IND-AS Rules 2015. So as and when there are amendments in this other accounting standards, which follow by companies IND-AS Amendment Rules 2016, 17, 18, 19, and now even 20. So whenever there is an amendment in any standard which has the reference of this standard, accordingly that para of this standard is also rather not amended but substituted. So basically the standard is notified under the company's IND-AS rules 2015 and we have to say as amended, so on and so forth. So first of all, we will analyze what is the importance of intangible assets, like Sumit sir rightly said. So it is one of my biggest observation that when you talk about intangible assets, this standard has always remained underrated. So why do I say it is underrated? Because I present to you this analysis. Here I have tried to capture all the sectors of which the companies comprise in the Nifty 50 index. So if you see the Nifty 50 index, majority of the portion is of manufacturing companies and service sector is less of that. So here I have tried to capture each company that is leading in that particular sector. And as you can see, most of the companies have very less percentage of intangible assets to its total assets. So I will tell you practically what happens in the boardroom. First of all, if you are on the financial reporting side, like you are the preparers. So this is a once in a lifetime of an intangible asset type of concept in a property, plant and equipment, which is also a non-current asset. There are multiple types of transactions that are happening. There is a subsequent measurement, there is a what we call as a provision for decommissioning liability, and then you have revaluations, impairment. Many things are going on in a property, plant and equipment, but for intangible asset it is as simple as you acquire intangible asset and then it will generally be depreciated, or we call it here as amortized over its life. So there is no much penetration that is being done for intangible asset. As you can see that only few companies, and that too you can see, suppose for Ultratech Cement, so the major portion, it has 14.97%, which is the highest in this particular table. It is 14.97% because it is having a mining reserve. So all the companies who are having some digging in a natural resource, this natural resource, they have to take rights from the government. Those rights form the part of intangible asset. Otherwise, the typical intangible assets that we think of, which is a copyright, patent, that is not having very much value, which is why the standard has remained underrated. Now, when you come to the auditor side, first of all, you are on financial reporting side. Now you come to auditor side. When you come to auditor side, what happens generally? The company has initial recognition of intangible asset, and then generally it is nothing but amortized over its useful life. So whenever this amortization is happening, you don't have to, you just have to see whether it is properly allocated over its useful life. So what happens, like if you see the checklist of an audit, there will be multiple items for property, plant and equipment. Multiple items, you see decommissioning cost, you see this revaluation frequency, you see what is the useful life. There will be very few line items for intangible asset. So this standard becomes all the more important. Now what happens? Suppose for 3 continuous years, like from since when the GST came, after that there is no adding to the intangible asset. So you have forgotten what is intangible asset, how it is recognized, what are the disclosure requirement, what is the recognition requirement, and suddenly there is an intangible asset in the company. So now you are running, finding some summary how to recognize this intangible asset, what all aspects do we need to check while accounting or auditing of this intangible asset. So it is very important that to have refresher course on intangible assets also. Otherwise, this always we have seen that intangible assets, it is always 2 to 3 line items in audit checklist, and even in the boardrooms it is not a very important matter. It is like ठीक है चलो मटीरियलिटी में मतलब कुछ मटीरियलिटी ही नहीं है इसका तो इतना ज्यादा. So and again I am giving you a disclaimer that here there are certain companies you can see that they have 12% or 10%, which is material and significant also. But when you see the totality, like the BSE 500 index companies or the Nifty 50 index companies, you will see that the quantum of intangible asset to total asset is very less. Even the quantum in value as well as the frequency of transaction. So it becomes all the more important to have refresher courses for intangible asset. So on that note, I start my technical discussion on the bare standard of IND-AS. And before that, let us discuss that why is this standard related with the property, plant and equipment. So if you see the property, plant and equipment and intangible asset by nature both are non-current asset. So the framework for accounting, it has to be same for both the type of standards. But for intangible asset, you cannot have similar provisions like property, plant and equipment, because for a property, plant and equipment, it is a very simple thing. You have a tangible asset, you can demonstrate that you will have future economic benefits from this asset, you go and capitalize that. It is not that simple for an intangible asset. Why it is not that simple for an intangible asset? Because if you have intangible asset, you will always see that these are entity specific. Let me take an example. If you have a mining right, that right has been given to you, you cannot transfer that. Okay, sometimes the rights are transferable. Let us talk about ERP software. If you have prepared an ERP which is customized to your organization, you cannot transfer that. So without transfer, you cannot demonstrate future economic benefit. That is why it is a very critical aspect, which is the recognition criteria of an intangible asset. So first of all, the objective clearly states the accounting treatment for intangible assets not dealt by any other standard is prescribed here. This standard is making itself a residual standard. if any other accounting standard does not prescribe accounting treatment for an intangible resource, only then you have to resort to this IND-AS. Again, you have to focus on what words I have used. I have used the words intangible resource and not intangible asset, because there can be many intangible resource which you think are intangible assets but they are not. So that we will understand which resources are intangible resources and which qualify for intangible asset. But before that, intangible asset does not apply to intangible assets that are covered by any other standard. So for example, if you have held an intangible asset for sale, you are going to sell it, then the standard is not applicable. If you have a goodwill, now we will have an elaborate discussion on goodwill, because what happens is goodwill has been always a theoretical concept and there is a lot of theory on goodwill. After studying all those theory, you don't know what exactly goodwill is. So something it is a reputation, something it is the value of assets that we have built over the as the business progresses, but it is not like that. So secondly, this does not apply to financial asset. Obviously, we have a different standard for that. It also does not apply to exploration and evaluation asset. We have a separate standard, IND-AS 106 for that. And it does not apply to extraction of mineral oil, gas, all these things. So I am not saying that it does not apply to the rights for extracting these things. It does not apply to the extraction activity. If you have the rights of extracting mineral, coal, gold, that is very much covered under this IND-AS. Now there is another line, this is a para 4 of this standard states, even if intangible asset you see it is the intangible resource qualifies as an intangible asset, but any other standard prescribes treatment for that IND-AS, you have to do accounting for that standard. Now what is the example? If you see, if you have an intangible asset which is held for sale, I will talk about the company which is dealing in software, like Infosys is preparing and selling Finacle. Now Finacle is its inventory, it is an intangible asset, but it is not holding it for use, it is holding it for sale. If you hold for use only, then it is a non-current asset, otherwise it is an inventory. So for that you don't do accounting under this standard, you go to IND-AS to inventory. Second is goodwill. Goodwill is not under this standard, it is under IND-AS 103 business combination. So next we come to, now there are certain cases, like the definition of intangible asset states that this type of asset does not have a physical substance. So, and again, I recently told that this standard says if there is accounting treatment provided by another standard, you go to that standard. Now, what if there is a conflict? So I am telling you, there is a computer. Inside that computer, you have an operating system. That operating system is suppose a Linux or maybe XP or Windows 10. So do I have to segregate the portion of what is the value of this laptop as a standalone and what is the value of that operating software? No, it is not like that. The standard says the entity has to assess which element is more significant. So suppose there are two things. You have to assess which element is more significant and you have to assess whether the software is an integral part of hardware. Now let us talk about the operating system. If you have a Linux, Windows XP or Windows 10 to be in the current times, can you use it without this particular laptop? You cannot use it without this laptop. You need a laptop for that. If you have a license, it can run only on this laptop. It cannot run on any iPad or mobile. But say if I have a Microsoft Office, this Microsoft Office is available in a CD. I can use it in this laptop. I can use it on any other laptop. I can use it on iPad. I can use it on MacBook if I have the setup files for that. So in that case, my integral main part is software and not the hardware. So there are two things. If your element which is significant is that of tangible nature, you take it to property, plant and equipment, which is your case of laptop and operating system. You cannot use the operating system without the tangible asset. So you have to capitalize it as a computer only. You cannot say that I will segregate the operating software differently and the this body of laptop differently. Second, if you have a CD, if you have a Genius software or you have any taxation, I don't know which taxation software are going on latest, but if there is a Genius or maybe there is a tax based software which you have on a CD, you cannot say that the accounting treatment for this will be done by a property, plant and equipment, because here the main guzzlers that we call, the main significant part is your software, that is the knowledge or that is the setup file. It is not the hardware that you are seeing. So in that case, it will be accounted as intangible asset only, even if the physical substance is embodied in a tangible asset. Next is the expenditure results in an asset with physical substance. Now suppose you are developing a robot, and in developing a robot, this is in-house development of a robot, and you have incurred a lot of expense, a lot of research and development that you have done, and now that it has become technically feasible and there is an active market that is going to be there for this particular prototype. So you cannot say that in the standard it is written that if accounting is given in any other standard, then you have to apply that standard, because here what you are trying to do is application of knowledge into a substance which is a physical. It is just an application of knowledge here. The major part is the knowledge that you have applied, and the substance that you are seeing physical is secondary to it. Hence it is accounted under this asset only. Now what if there is a conflict with lease? So again I am telling to you why we are having this discussion. Why this discussion? Because the standard in its very first para says if there is a specific accounting standard which gives accounting for this type of resource. If you see in the practical life, if you try and assess, everything is which is intangible will also have its accounting treatment in some or the other standard. So if you satisfy the criteria of that standard, only then you go. But there are certain cases, like if you have a lease of motion pictures, suppose if there is a match tournament going on and in the background they play some music which they have taken on lease from this Dharma production or whatever producing company it is. So you don't have to treat it under IND-AS 116, that is the leases. You have to treat it under this standard only. Coming next. So what are intangible assets? The definition that is given in the standard is identifiable non-monetary asset without physical substance. Okay, and then there is a, it should be controlled as a result of past event and future economic. Where this is written, this is the definition of an asset. So we will break this definition into three very important parts. First is identifiable, the second is control, and third is future economic benefits. So before discussing on these three important, because if you ask me what is there which is important in intangible asset standard, there are only three things. First is the recognition criteria, the second is the internally generated intangible asset, and asset with indefinite life. These three are the most important which you get to see issues in real life. Otherwise all is stereotypic. You just have to do the accounting as you do for any particular asset, and you go on amortizing it over its useful life. So what is a non-monetary asset? Any asset which is not a monetary one is a non-monetary asset. So what is a monetary asset? Monetary asset is which is cash settled. So obviously cash is your monetary asset, and all those assets, the settlement of which, like a receivable balance or a bills receivable balance or a debtor, all these are by monetary assets. So intangible asset cannot be a monetary asset. Second thing, it should be without a physical substance. But yes, we have discussed the exceptions to this, that even if there is a physical substance, but the integral part of that physical substance is the knowledge that is embodied in it, then you have to do the accounting in intangible asset. Now coming to our definition, it is identifiable, control, and future economic benefits. More than 10 to 15 times in my entire presentation, I am going to repeat these three things only, because there is a very thin line of difference between intangible resource and intangible asset, and that is always triggered by non-compliance of these three things only. So what is the meaning of identifiable? Identifiable means the resource should be separable or it should arise from a contractual or other legal right. So now what is the meaning of separable, or what is the meaning of contractual or other legal right? Separable means you are in a capacity to give this particular resource on lease, or you can sell it, you can transfer it, or you can create a license out of it and make it available for a sale. All these things. So all in all, I am trying to say the asset which you want to see as an intangible asset, it should be separable. So in essence it should be useful to others also. It is not like it is a entity specific asset and it can only be used by this entity, it does not have any value for anyone else. If that is the case, it is not, it is only an intangible resource but not an intangible asset. Or, the word is or and not and. It could arise from contractual or other legal right. Now separable is a very difficult criteria to be qualified, because there can be assets, like I said, a ERP. You have customized an ERP, and you will, nobody else is going to buy that ERP because you have customized it as per your requirement. So how is this separable? This is not separable. So can you not call this as an intangible asset? No, they have given it as it arises from a contractual or legal right. And yes, if you have customized an ERP, then it is arising from a contractual right. So it is identifiable. Now coming to next part, which is control. Control means power to obtain the future economic benefits and restrict the access of others to those benefits. Second part is very important. And I will tell you, if you see 10 cases of conflict with either CAG or the auditor and this financial reporting finance team over this intangible asset, every time it will be because of this concept of control only, because many companies are not able to, you will say it is control according to you, I will say it is not control according to me. It has always become a subjective concept because of the estimation that is required. Like you say I have the power to obtain future economic benefit and restrict access of others, I will say no, I can prove that you cannot restrict the access of others. So all these things happen, which I have also covered in examples in later slide. Third is future economic benefits. Now, this word is used in many places in Indian accounting standard. In property, plant, and equipment, you see in impairment, many places, investment property, everywhere it is mentioned it should be future economic benefit, future economic benefit. But what is the meaning of future economic benefit? Future economic benefit means this particular thing from which you are expecting a future economic benefit, it should be capable of earning revenue by selling it, or you can use it and make something which will be sold and you can earn revenue, or it can result into cost saving. So if you have an intellectual property, like you have a technical know-how, now what will happen due to this technical know-how, you will be able to reduce the cost. So in a way, reduction of cost is increase in revenue only. So that is your future economic benefit. And third, any other benefit resulting from use of asset that you are able to demonstrate. If there is a complex chain of business, if you are able to demonstrate this particular resource in this way contributes to our revenue, then also you satisfy the criteria of future economic benefits. Coming next, again the standard says you have to satisfy the condition of identifiability. First condition that the standard gives is identifiability only. The standard should be identifiable. For that, it said it could either be separable or it can arise from a legal and contractual right. But for many standards, you will see, like I am talking about the major standards, assets, intangible assets that you will get to see in books, will always be some rights related to which are given by the government, like the mining rights, coal mining, gold mining, something like that, or ERP. These are the guzzlers that you get to see for intangible asset. They cannot be separable. This, if you see the agreement, it is written that this is a what you say, non-endorsable kind of agreement. You cannot go and say that I am going to sell my business and I want to give this mining rights to some other company. No, that cannot be done. They have to make a separate application to the government, and only after that it will happen. So if you see many of the cases where intangible resources qualify for intangible asset on the condition of identifiability, it will always be because of legal right or contractual right. So I have taken two examples. One is on legal right, one is on contractual right. So if you have a license to operate a radio station, which you are getting from the government, that you can operate this radio station, so it cannot be separated from you, but still it is a legal right and you can qualify it as an intangible asset if other conditions are satisfied. Next is a contractual right, where you have acquired another company, okay, and that another company, you have asked that you cannot enter into this particular business for say suppose 5 years, and for that you have paid some non-compete fees. So this non-compete fee is arising from a contractual right. You can prove all the other criterias of control and future economic benefits and qualify this as an intangible asset. Next, moving to some of the examples of intangible resources. The standard itself gives examples of intangible resources, but I will also say, and the standard also itself says, you cannot say, you cannot make a thumb rule that this particular intangible asset, intangible resource to be precise, will be intangible asset or not. Like here I have mentioned that recognize if criteria are met. Again, it cannot be a thumb rule that customer list. Here I have highlighted one example, customer list. Now what is a customer list? Suppose you are a FMCG company and you have a large what we call as a network of customers. So you have made one big maps. On that maps all over India, or maybe particular state or region wise, you have plotted all the customers. You have plotted the customers with what is their demand, what is their credit period that we have allowed. Everything you have mentioned so that the management gets a clear picture. So you have incurred a lot of expenses on developing these maps, and you are calling it this is a customer list. You cannot capitalize it if the criteria are not met. What is the criteria? The three conditions that we said: control, future economic benefits, and identifiability. So if this is not separable. Customer list, this is important to your company, you can use it any other. It is also not arising from any contractual or legal right. You just went to some graphic company, you explained them your business, they have plotted this map of India and all your customers with all their necessary details on it. There is no contractual right, there is no legal right, it is not also not separable. You cannot capitalize this resource as an intangible asset. But if you have a customer list which you are able to sell in a business combination to some other entity that is acquiring to you, then it becomes a what is the need of checking the separable criteria? It is already buying your intangible asset, and the very reason that it is buying for you is because of your customer base that you are having. So you cannot make a thumb rule that this particular resource will be an intangible asset and this particular will not be an intangible asset. So these are some examples. It will include licenses, it will include customer and supplier relationship, startup cost. All these examples are of intangible resources. You need to check if the three conditions for falling in definition of intangible assets are qualified by these or not. And the biggest thing that I have highlighted here is goodwill. There is a very big misconception in the market that what is a goodwill. So what is a goodwill? Good. So what people think that it is a reputation. First of all, it is nothing like reputation. Second thing is goodwill covered under IND-AS 38. I will tell you something. IND-AS 38 deals with recognition, subsequent measurement, everything. It does not deal with goodwill that you can capitalize in our books. If you have a goodwill in your books, it simply means it has come via IND-AS 103 business combination. In no case you can have a goodwill in your books in the form of IND-AS 38 generation. So what is a goodwill? Now people think that there is a particular building, it is a valued at 100 lakh rupees, and over the period of time its fair value has increased. So when I will sell this business, the net assets which are having a book value of 100 crores, which are sold for 300 crores because they are having a market value of 300 crores. So that difference of 100 and 300 is my goodwill, which is wrong. If you see the standard of business combination, your purchase, what is your goodwill? It is purchase consideration minus net value of your assets, which is the fair value of asset. So if your asset which was already at 100 lakhs and it is now its fair value is 200 lakhs, the difference is not your goodwill, it is your realization of that fair value of asset only. So what is goodwill? If you see a business, practically if any company is acquiring any other company, they are not seeing what is the fair value of asset. They are seeing what is the future potential of this company of earning revenues. So for example, your book value is 100 crores, but fair value of all your assets is 200 crores. But still the purchase consideration is 250 crores. This difference between 250 and 200, that is your goodwill, and not difference between 100 and 200. Because if you see in the books of acquirer, you are going to recognize these assets which you are going to receive at fair value only. So goodwill is difference between the purchase consideration, which is never dependent upon what is the fair value of asset. It is dependent upon what is the future income earning potential of this particular entity. The difference between purchase consideration minus fair value of asset that it is going to receive. Now next we come to an example on control. So here what a company has done, it has recruited a player and they have done a contract with this player that you cannot play with any other, you cannot play for any other company, you cannot play for any other team. Whosoever team I tell you, you are going to play for that team only. And the amount that they have paid for this, they are incurring further cost of developing this player and giving him more training by some particular coaches. So now they are asking that whether we can capitalize this player as our intangible asset. Now this is obviously a resource. Now you cannot say that this player is a person. So it is having a physical substance. Here the money that we have paid is for the skills that he has, right? So whether this cost, now you have to see all the three conditions. First of all, whether it is identifiable. So you can see here we have done a contract, so it is arising from a contractual right. Second point is whether do you have a control. Yes, you have written in the contract that you cannot play for any other team. Whosoever team I tell you, you are going to play for that team only. So yes, you also have a control. And third, it will have future economic benefits if this player plays matches, and whatever revenue is earned is going to be received by the company only. So all three conditions for qualifying as an intangible asset are satisfied. Now whether you have to recognize or not, there are further conditions of recognition which are in the further slides. So the recognition principle in IND-AS 38 is given in para 21. Para 21 has two parts, 21A and 21B. 21A says the future economic benefits from this intangible asset should be probable. 21B says cost should be measured reliably. Now someone will ask that what is the difference between future economic benefit which is there in the definition of intangible asset. I will take you to that slide. In the definition of intangible asset, we have one future economic benefit. Now we are saying if you there is an intangible asset, but if you want to recognize it and if you want to defer that expense, you have to fulfill recognition criteria also. So here also you have future economic benefit. Then what is the difference between future economic benefit there and what is the difference with future economic benefit here? What future economic benefit is there in the definition is only a capability, whether this particular resource is capable of generating a future economic benefit or not. When you come to recognition principle, you have to demonstrate that it is probable that there are going to be future economic benefits that you can attribute to this particular asset. What is the meaning of probable? Probable means more likely than not, means you have a probability of more than 50% that because of this intangible asset, you will have directly attributable future economic benefit. That you have to show. Who will check? The auditor will check what assumptions you are applied. You have to arrive at a value, that what is the value that I am going to derive by the use of this intangible asset which I intend to recognize. So that you have to show, and that should be based on observable inputs. You have to apply a probability theory. What will be the best case scenario, what will be the worst case scenario? All these things you have to consider, and then you have to identify whether this asset will have a future economic benefit and whether the cost can be measured reliably. Cost reliable measurement is not a challenge for me if I am acquiring an asset. If I am acquiring an asset, it is as simple as that. You have incurred some cost, you have a bill for that, see what is the value written on the bill and go and capitalize that amount. But if the asset is internally generated, you are self preparing that asset, then it is a challenge of cost measurement reliability. For that, you need to check what is the authenticity of costing systems that the company has, because every cost cannot be capitalized under this heading. You cannot say that for having a negotiation team for this intangible asset, we went in a taxi, so the cost of this taxi also we will be capitalizing in this intangible. It cannot be like that. So the cost should be directly attributable and it can be measured reliably. So to discuss what are the types of intangible asset that can generate in your books, it can be you can acquire separate acquisition, like for ERPs generally it is going to be case you are going to contract with SAP, Oracle, or any other company that is in dealing with ERPs, and you are going to purchase from them. Or you can get intangible asset in business combination. Very, very important. Most of the times you see complexities in intangible asset, it is in business combination only. We will discuss further why it is happening. Then you can have it from government grant. Rarely the case, no government is giving you a grant for having an intangible asset, right? You all are having this ERP from foreign companies. What government is going to give you grant for promoting the sales of foreign companies? Then it can have exchange of asset. Again, very rare. You are not going to say I am exchanging one intangible asset with another intangible asset. But yes, the standard cannot have any room for twisting, so they have given this things, and I will say this bluntly, these are all copied from the property plant and equipment standard only, because in essence I already told, in essence this intangible asset is also a non-current asset. So the measurement and recognition principle cannot be different, they have to remain the same. Now let us see what is the criteria for recognition that we have discussed till now. So it is a very long journey that a intangible resource has to go in order to qualify for an intangible asset. First of all, it has to qualify the definition of intangible asset. Then is to qualify para 21 of IND-AS 38. So what does it say? You have intangible resource. First, you check whether it is identifiable. For that, we discussed it should be either separable or it should be arising from legal or contractual right. If this is yes, then you go to control. Whether you control the future economic benefit, most important, whether you can stop others from accessing it. We also have a case study on this, that you cannot stop others from accessing it, then that is not an intangible asset. Even if this is satisfied, you see whether it is capable. You don't have to demonstrate at this stage, you don't have to show it to anyone. It is just that your estimate should say it is capable of generating future economic benefit. If all these three are satisfied, then your intangible asset is defined. Now your resource becomes intangible asset. Whether you can recognize it and defer its cost now is on para 21 of IND-AS 38. It says that whether it is probable that future economic benefits will be generated. At this stage, you have to demonstrate. So you have to prepare Excel sheet projections, everything you have to do to demonstrate whether this asset will generate future economic benefit. Then you have to see whether cost can be measured reliably. So I will tell you, I've seen many cases. Like what happens, management has arrived at a judgment that we control this particular asset, and they are working on this, developing Excel sheet projections, everything. They did a lot of hard work in finalizing this estimate and showing to the auditors that this particular resource has probability of future economic benefits. And then the auditor comes and he says, okay, I agree that it has future economic benefits, but this control criteria is only not satisfied because you have not read the IND-AS properly. So now I will give some saying in Hindi only. So the situation of the company is like this, कि एक चांद ही था गवाह मेरी बेगुनाही का, और अदालत ने पेशी ही अमावस के रोज मुकर्रर कर दी. So meaning that 10 things I did right. I did a lot of hard work, homework, everything I did. I applied my brain. I indulged outside valuer also for identifying this future economic benefit. Then the auditor found one mistake, which was a fundamental one, and then this all mehnat that we have done is gone in water. So that is the thing. Now moving to another case study. Now this is a case study of software as a service. This is a typical what we call it is a modern type of, where there is one company, it develops application softwares, it hosts it on a cloud platform. So if there is any other company who does not want to have an in-house, because developing of in-house software requires a lot of amount. So if any company, like generally it is the case for HR, if you see payroll software, they are generally cloud-based softwares. So there is this another company who has contracted with this company that I will use this software for 5 years, right? So depending on the usage, the fees is determined in the contract. We don't have to fall in that. What is the fees? Why is the fees? What is the basis for determining the fee? Essence here is that the company is asking, I have done a contract. My first condition of contract identifiable is satisfied. This is arising from a contractual right. Now, second thing it is saying, my contract states that I am going to use this cloud-based software for 5 years. So I am saying that my control criteria is also satisfied, and I am saying obviously it is going to help me generate future economic benefits indirectly, because the conduct of my business requires having employees, and to have employees I have to pay them salary, whatever the leave application, whatever they do, this is incidental to running my business. So obviously it has a future economic benefits. So can I capitalize this software in my books? The answer is no. You cannot capitalize, because in the definition of control I specifically state there are two things. You have the power to utilize future economic benefits, plus you should have the power to stop access of others. Can you stop others from accessing this software? No, you cannot stop. Others can also access this software. Other companies who are contracting with this particular vendor can also access this software. You do not have control, so you cannot capitalize this. But so what you can do about this software you cannot capitalize, whether it is a lease contract, that depends on whether you satisfy the conditions of lease in IND-AS 116. But you cannot capitalize this software. If you want to defer, you check any other resort that is available to you. This resort you cannot get to capitalize the software. So if the name of this software is, for example, uh, M software, so this name is company M software, you cannot show it in your books that it is my software for 5 years. You cannot show that. moving forward, another case study. Now here what has happened, there is one particular company, it has taken franchisee rights from Subway. So the amount is measurable, it has given this particular amount, and there is a contract. Again, you are always going to find out of 10 cases that satisfy for intangible asset, 8 or 9 cases will be where identifiable situation is satisfied due to contractual right only. So under a contract, it has 10 years. So the question is whether you can recognize this as an intangible asset. Again, you have to check all those 5 things only that we discussed earlier. Whether it is identifiable, yes, you have made a contract with this company. Whether you have control, yes, you have the control of this franchisee for 10 years. You can stop others from accessing it. At least the part which is granted to you, you can stop others from accessing it, and you have the power to future economic benefits. Third is future. Obviously, you are going to run this Subway. You are going to generate future economic benefit. Again, future economic benefit. Yes, you will have the budgets. You are going to prepare the budgets. What is going to be your forecasted revenue? That is your future economic benefits. Then comes cost. Obviously, cost we have already defined that we have paid 1 crore rupees, and for further period also we are going to pay something amount which is described in this agreement. So all the conditions for determination of an intangible asset are satisfied in this case, and you can move forward for recognition of this asset. Coming to the 5 modes that we had, now I am not discussing exchange of asset and government grant. Why? The reason being, these are both more relevant from the point of view of a property, plant and equipment, which is already going to be discussed tomorrow by my colleague Chandni. So it should not happen ke meri machli bhi maar di, right? So I am not, and you will never find that you are getting a government grant for intangible asset. You will never find exchange of asset in case of intangible asset. What you will always find is separate acquisition and business combination. And business combination, I will tell you, it is very important. So we will spend more time for this. Obviously, if it is a separate acquisition, there is very important concept in this standard, that is a probability of generating future economic benefit. Now, speaking of it in theoretically, it sounds very easy. What should happen? I will tell you what happens on practical. We say that फ्यूचर इकोनॉमिक बेनिफिट होना चाहिए, उसका मतलब क्या है? रेवेन्यू जनरेट होना चाहिए या मेरा कॉस्ट कम होना चाहिए? आप प्रूव कैसे करोगे? आप प्रूव कैसे करोगे कि मेरे को रेवेन्यू जनरेट हो रहा है? आप क्या दिखाओगे? बजट दिखाओगे, ठीक है? बजट में आप प्रोबेबिलिटी डिफाइन करोगे, बेस्ट केस सिनेरियो ये, वर्स्ट केस सिनेरियो ये, नॉर्मल सिनेरियो ये चीज को करने में you have to apply hell lot of assumptions, and for this assumptions it is not a very simple task. You have to involve multiple people, and this is a very extensive exercise which I will say. So this standard has said that if you are dealing in a transaction which is of commercial nature, if you are doing separate acquisition and business combination, this is a commercial nature, you are going to pay money for it. You don't have to sit and undergo entire exercise of determining what is the exact amount of future economic benefit that I am going to get. The standard has given you a leeway. Whatever amount that you are paying in case of separate acquisition, you are paying as a rational person. You are going to determine future economic benefit. So obviously the paragraph 21A criterion, which is probability of generating future economic benefit, is satisfied in this case. 21B is very obvious. Yeah, you are acquiring an intangible asset. You are obviously going to pay money. If you are going to pay money, you are going to have an invoice. Whatever value is written in the invoice, you deduct the salvatable taxes. If you are going to take the credit of GST, you deduct that. That is the value of an intangible asset. There is a reliable measurement of cost. You don't have to do anything extra for that. So both the conditions of para 21 are satisfied for a separate acquisition. You only have to check whether this falls in the definition of intangible asset or not. For that, we have 3 conditions. It should be identifiable, you should have control, and third is future economic benefits. Now, at what value should you capitalize this separate acquisition intangible asset? So it will be your purchase price. It should include import duty, non-salvatable taxes. For those taxes you are not going to get credit, you can add them. And the fourth thing that I have highlighted here is directly attributable cost. This is a very important. I have seen more than 5 to 6 EAC opinion on this word only. Even after so many elaborate guidance, you get to see. I think for this, even in the recent Chartered Accountant Journal, which is the August 2020 version, you are going to find a EAC opinion on this directly attributable cost, where every time CAG is challenging the treatment of the company, because this term is a very subjective term. Directly attributable cost, you will say this is directly attributable cost, I will say this is not. I gave you an example. Suppose you are doing negotiation of an intangible asset, and for that you went to some government authority to gain some license or something like that. You went by a taxi. Now you are saying this cost of taxi also I want to capitalize. There is one particular software engineer that is working in the company. His job is to work for the company. Okay, so he's working for the company and he's developing some intangible asset. You are saying the salary of this employee I want to capitalize. It cannot happen. It cannot. The job of the employee is to do whatever the company says. Now, if it is developing an asset, that does not mean that you are going to capitalize your salary also in this. So all these things are more relevant from a property, plant, and equipment perspective. So if you have a property, plant, and equipment that is self-constructed, there is sometimes I will tell you what companies do. My sale is 100 rupees and my CWIP, which means that the total value of assets that I have capitalized during the year is 15. So they will develop a ratio which is 100 is to 15. So if I have incurred 10,000 rupees of expense, 100 divided by 115 will go to PNL and 15 divided by 115 should be capitalized. These type of methods they are using, and you will get n number of qualifications. N number of qualifications you will get in the auditor's report. That, and I will tell you what happens. These financials are first what we say showed to board. They have this estimate of profit, that this much is the profit, they are happy, and then suddenly auditor comes that this amount that you have capitalized, you put it in PNL. So now all numbers have changed. So management is not agreeing. They are saying you go qualify. So that is where you need get to see n number of qualifications on this directly attributable cost as well as CAG. See what happens, why this thing is always challenged by CAG only. There is a concept of audit. Audit is done. Financials are board meeting is also complete. Then this supplementary audit by CAG comes. The thing is, when you have freeze the numbers in front of the management, in front of the board of directors, now if CAG comes and tells that I don't agree with this accounting treatment, management is reluctant to change its numbers. This always happens when the CAG comes for supplementary audit. So then what they say, we are going to refer this case to ICA expert advisory committee. So you check, if you check 10 ESC opinion on property, plant, and equipment, you will get at least 5 that are on this directly attributable cost only. Now, so enough of discussion on property, plant, and equipment, or say directly attributable cost. Let's come to a business combination. Here also it says that if you are entering into a business combination, which is an amalgamation to be specific, then the criteria of para 21A and 21B are deemed to be satisfied. You don't have to conduct an exercise. I will tell you when you have to conduct an exercise, only when you are internally generating an intangible asset. Otherwise, how will you come to know that what is the amount at which I have to recognize that intangible asset? When it is a separate acquisition or a business combination, you already know the intangible asset that you are acquiring in a business combination, you have its fair value. What does its fair value, what is the meaning of fair value? Meaning of fair value is that someone is ready to buy this asset at this cost. So it cost can already be reliably measured, and the fact that there is someone who is ready to buy itself means that there is future economic benefit. So you don't have to do the exercise of preparing projections and all. That is deemed to be satisfied in case of a business combination. Now, we always see now there is a difference in accounting treatment of property, plant, and equipment and intangible asset at fundamental level in this business combination. Because generally, initial recognition, make it a thumb rule, I will say. Initial recognition of non-current asset always at cost only. But in case of a business combination, that will happen at fair value. Why? Because if you see IND-AS 103 business combination, if a acquiree is selling some asset to acquirer has to do the accounting of asset on the basis of fair value only. So the recognition has to be done at cost. But what is the cost? It is not the book value, it is the fair value. So in essence, you are doing fair value accounting when you are acquiring an intangible asset by way of a business combination. Now, what is this difficult thing that I have written here, which is in process research of acquiring, which was not recorded in this book. I will come to this later on. First of all, we should discuss what is the concept of research and development. After that, I will come to this part. So let us move forward. The third part, we had 5 parts. First was separate acquisition. second was business combination, third was internally generated, fourth was exchange of asset, and fifth was government grant. Out of which I said I am not covering exchange, I am not covering government grant. So two we already discussed, separate acquisition, and the second one being business combination. Now this is the third one, which is the most important part of this Indian accounting standard, which is internally generated intangible asset. It specifically says in the very first line, there is a heading of internally generated intangible asset in this standard bare text. It's in its first line only. It says, do not recognize goodwill as an asset. If you see goodwill in any of the financial statement, it simply means it has come from IND-AS 103. That company might have happened to have a business combination in past. Otherwise, there is no way you can have a goodwill in the books in form of IND-AS 38. Now, if there is expense, which I will tell you why you cannot have a goodwill in the books, because there is a concept called as building business. You are building your business. How can you distinguish between an expense incurred for building a business and goodwill? Goodwill is nothing but future earning capability of your company. How is that built? By you are doing some activity that is creating value for your company. If you want to realize this value, there is only one way, and that is you sell this company. Only then you will come to know what is the purchase consideration or what is the fair value of asset. Otherwise, you cannot demonstrate that this particular amount that I have incurred is separate from building my business. So you cannot capitalize goodwill. Next, if you have any other expenditure which is not related to goodwill, so like we took the example earlier, we are making a robot. If we are making a robot, we don't even know this robot is going to be successful or not. We don't even know if this robot is actually going to work. We don't even know we are going to be able to complete it or not. So the standard says if you are developing an intangible asset internally, classify it into research phase or development phase. So what is the meaning of research phase? Suppose you are following a particular process for manufacturing something, and now you think that we can do more digging in and we can reduce the cost. We can reduce the cost. For this we have to develop some new technology, or we have to develop some new device, we have to develop some new process. For that you start doing research. So this is now theory. You don't know whether it is going to be successful. You are just starting your attempt to see whether you can capitalize this opportunity of reducing cost or not. So if it is only an investigation, you are applying your theoretical knowledge to check if we can go ahead with this. All those type of costs are research cost. You cannot capitalize them. They have to be expensed off in profit and loss as and when incurred. Now going next, what is then development phase? Once you have satisfied the criteria of pirate, right? So if you are happen to be appearing for CA final, I will give this short form to you, pirate. As such, you are not going to get questions on this, but it is very important to remember this, that what are those conditions that are to be fulfilled if you want that this particular research phase is now ended and now we are into development phase. So those are probable future economic benefit, intention to complete and use or sell it. Now, very important question is, how will you know probable future economic benefit for the asset that is not yet ready? This standard says you can apply the method that is provided in IND-AS 36, that is impairment of asset. What is that method? That method is you have to derive the value in use. Derive value in use or fair value less cost of disposal. That is your future economic benefit at the stage where you want to move ahead from research to development. Second is intention. Now, how you check intention? If you are able to satisfy technical feasibility of a robot, but the estimates say you are going to incur a cost of almost 10 crores, and now your net worth is going in negative, you don't have funds, nobody is ready to fund this particular venture of yours, then you do not have the ability to complete this asset. In that case, you cannot say that I have development. So you have to see that whether you are funding all these things like resource adequate and available to complete and use or sell, ability to use or sell, whether this asset is going to have any market or not, technical feasibility, expenditure reliability. This is very important. Expenditure reliable measurement. I earlier said how this can be established. This is with reference to the costing system that you have. Whether you have a costing system where you can distinguish what all expenditures were incurred in respect of this intangible asset, only then that particular amount that is directly attributable you can capitalize in this development of this particular asset, which in our case is robot. Now coming to other assets, if I'm not wrong, para 68 of IND-AS 38 says you cannot capitalize brand, publishing title, customer list. I am telling you personally, even if you see our first, second slide where I have mentioned that these are the names of companies and these are their intangible asset, you can see customer list there. So even if the standard is saying do not capitalize, it really depends if you are able to demonstrate that the customer list that I have prepared are separable, so they are identifiable, you have control from them, you can derive future economic benefit, then you can capitalize that also, and companies do that. This standard specifically mentioned you cannot capitalize customer relationship. If there is a, I will give you an example. There is a company which is having a distribution network all over India. Another company wants to acquire this company just because of this distribution network only. There is the another company which is going to X Limited is going to acquire Y Limited. Now why X Limited is going to acquire Y Limited? Because they are falling in a vertical integration. So Y Limited is producing the raw material which is there for X Limited, which is the raw material for X Limited. So the distribution network of Y Limited is very useful for this X Limited, and they are going to acquire this company for the distribution network only. What is this distribution? Distribution network is nothing but the customer relationship that they have maintained, that these distributors are going to purchase material from this company only. So if the company is able to demonstrate that all my 5 conditions are satisfied, then even they can capitalize customer relationship also. And second thing, there is a very important concept in IND-AS 38, that is when there is a business combination, even those intangible assets that were not capitalized by acquiry, if they fulfill your, see, there can be a case where definition of intangible asset was satisfied, but it could not satisfy para 21, that is the recognition criteria. So acquiring company did not capitalize it because it didn't fulfill the recognition criteria. What IND-AS 38 is saying, for the IND-AS 103 business combination, it is deemed that para 21 is satisfied. So it is, even if the acquiring company in its books said that we are not able to satisfy para 21, if you are entering into business combination, it is deemed to be satisfied. So what earlier used to happen, that company did not capitalize this particular intangible asset, you will have to capitalize it. And that itself is the case of that in process research. So first of all, let us go to that question only. This part is in process research of acquiring, which was not recognized in this book. So there was a research expense which was done by that particular company, which is in our example, say Y Limited. X Limited is going to acquire Y Limited. Y Limited did not recognize research expense because it did not fulfill the recognition criteria. This standard is saying if they have done a research expense, you just have to see whether the definition of intangible asset is satisfied. Otherwise, para 21 is deemed to be satisfied. So now what will happen? For them, it was expense of in P&L for that particular year. You have to bring it to your books, and it will be capitalized. It will be capitalized in your books. So we also have a case study on it, that how will we do accounting for this if this is the situation. And again, if this is the case that you have acquired research of some another company, so what this has become, it is nowhere defined in this IND-AS. This you get to see if you refer this IFRS, which is equivalent IFRS, which is IAS 38. It is written in basis of conclusion that in standard nowhere it is mentioned that what is the meaning of intangible asset which is not available for use. This is the thing. In process research, do you have it available for use? No, because you have not established technical feasibility only. So it is there in your books, but it is not available for use. For these type of assets, you have to test impairment annually. That is a different story. We will see the case study, we will get to understand more. So this is the example which I was saying. This Y Limited is being acquired by X Limited. It had a process research and development expenditure, which they did not capitalize because it didn't fulfill the criteria for them. So now what we have to do? We have to capitalize it in our books as in process research, and you have to show this as intangible asset not available for use. This is not available for use because technical feasibility is not yet established. Now this question says X Limited has incurred a cost. It has First of all, it capitalized it in books. Now Y Limited is gone. In the next year, companies incurred some cost. Now what we should do? Whether we should capitalize because we have already capitalized the in-process research? No. If the expense falls in research criteria, you have to expense of, you have incurred some expense to establish technological feasibility, then also you expense of. Only once the criteria of development is fulfilled, post that all expenses you are eligible to capitalize. Otherwise you cannot say कि यार मेन एसेट ही मैंने कैपिटलाइज कर दिया है तो बाकी के एक्सपेंस में मैं क्यों चेक करूं वो रिसर्च फेस है या फिर कौन सी चीज के लिए वो एक्सपेंस क्यों है. नो, that has become a standalone asset which is not yet available for use. For you have to satisfy para 21. It is not deemed to be satisfied for you. It is deemed to be satisfied only in case of a business combination. Moving forward, another company, another case study. This is of Reliance Industries Limited. So instead of reading what all this text is written, I will tell you what the example is. There's this company, Reliance Industries Limited. It has a brand FIO. So whenever these cricket matches happen, or maybe some cultural event or anything like that happens, they sponsor those events and provide those banners of theirs to showcase in those events. So it is saying that I am able to charge premium for consumers, and my consumers are retained due to this branding. It also says that the benefit which I am going to get of this branding is going to be spread across years. Like I for this. Example, we can say that it is going to be spread over 5 years. So can you defer the cost to the 5 years? That is the question. Answer is no, you cannot. Again, the question is that do you have a control? Can you control these customers that you are saying that they are going to come to you only, or you are going to charge a premium from them? Do you have a control over it? No, you do not have a control. They will go to some other company. They will go to some Airtel company, Fairtel company in this case. You cannot control that. So you cannot capitalize that brand expense simply for the reason that you do not have the control, and you have to expense off in the current year only. And second thing, how is this expense different from building a business? You are doing advertisement expense. This is a promotional expense. This is for building your business, and this is not for building a particular intangible asset. So you cannot capitalize this. Next comes that if internally generated intangible asset after a long journey, what is the long journey? First you satisfy definition of intangible asset. Then you come to recognition criteria. In recognition criteria, there is research phase. After that, there is development phase. Even if you satisfy all these things, then you have to measure it at cost. Now, what very important example that I will give. Suppose a company, it was trying to build a robot. It incurred 20 lakh expenses, which was in research phase. And subsequently, in the same year, up to 31 October, it was research phase. Now all the conditions of development phase are satisfied. So this company is saying now it is development phase and we are going to capitalize. We will also capitalize the 20 lakh. Up to satisfy ho gaya na condition. It cannot happen. So we have written here no retrospective recognition. Till the date of research phase is continuing, all those expense must be charged to P&L only. You cannot say subsequently uska definition satisfy ho gaya development phase ka to we will capitalize it. No, it cannot happen. Next is subsequent measurement. And if you see the above where I have put a cross, subsequent cost, there is a difference between subsequent measurement, subsequent cost, and subsequent recognition. If you consider a case of intangible asset, hardly there will be any subsequent cost. You see, what are these intangible assets? This is a customer list. If it qualifies definition, it is a ERP software. It is a what we call as mining rights, or gold mining rights. What is going to be subsequent cost in that? We capitalize subsequent cost only when we are going to get future economic benefit. You will not see any subsequent cost for intangible asset in general parlance. If it is there, you have to satisfy future economic benefits criteria. But from my experience, I will tell you there is no subsequent cost majorly which is going to be capitalized. The subsequent cost which is there for maintenance, you cannot capitalize that. Anyways, you have to book in P&L only. So what are the model that you have for subsequent measurement? Similar to property, plant and equipment, cost model and revaluation model. Now this cost model or revaluation model, you have to apply class by class basis. So you cannot say that I have total 5 patents. For 2 patents, it is beneficial for me to apply cost model. For 3 patents, I am going to apply revaluation model. No, patent is a class of intangible asset. If you want to apply fair revaluation model to patent, it will be for all patent. But it is possible that you have a copyright also and you have a patent also. You can use revaluation model for copyright. You can use first model for patent. That is allowed because a class of asset is a grouping, logical grouping. So copyright and patent are not one grouping. They are two different groupings. You can follow two different models for them. Now, if you talk about cost model, as simple as that, it is recognized that cost, it is depreciated or amortized over its useful life. Whenever there is any indicator for impairment, you test for impairment. If there is impairment, you deduct the impairment. So it is as simple as cost minus accumulated amortization minus accumulated impairment loss. Technicality is in revaluation model. Oh, what is the revaluation model? You have to consider fair value. The fair value will form the basis at the measurement date. The fair value should be with respect to active market. You have to demonstrate that there is an active market for this particular intangible asset. But in you check out BSE 500 companies or Nifty 50 companies, no company in India, at least in Nifty 50, is following this revaluation model. No, all are following cost model only, because I will tell you why companies are not following revaluation model. It is against the concept of prudence per se. How can you book income which is not yet generated? Agree that it is the best thing that I have seen for this is, if you see the investment property standard, they have not allowed you fair valuation only. You can only show the fair value in notes. You cannot bring it books. Here what they are saying, if there is a revaluation increase which is against the prudence concept, you have to book to take it to OCI. Investment property, you will see even that they are not allowed. They have said that if there is only one model, that is cost model, but for particular investment property you will show what is the fair value in notes to account. So again, coming to our discussion, revaluation model of intangible asset, what will happen? Fair value, and the word here is subsequent accumulated amortization. So whatever is the fair value, the subsequent fair value that you identified, you amortize it over its useful life. And if there is any impairment loss, you deduct that. What is the frequency of revaluation? If your asset is very volatile, intangible asset is frequently changing its value, then you have to do it annually. Otherwise, you can have a logical basis which will be decided by the management. So estimation is involved here. That what is the volatility of this particular intangible asset. But all this has remained a theoretical discussion. No company is applying revaluation model, right? So if you want to see the accounting of revaluation model, there are two methods that can be followed: gross model or net model. Rest will be explained tomorrow in the session of intangible asset, property, plant and equipment. So next we come to revaluation model. We already discussed, if you are following a revaluation model, so carrying amount will become your fair value on the date of revaluation. So if your earlier carrying amount and the current carrying amount, which is now the fair value, the carrying amount is increasing, to take it to OCI. I have given you the reason why we are taking to OCI. This is the violation of prudence concept. You cannot realize any income that you have not earned yet. So that is why you are taking to OCI. Even in OCI, you are taking it to revaluation surplus. I am telling you what is the purpose of reserves. OCI means you are taking it to reserve. This revaluation surplus is not a free reserve. You cannot use it for the purpose of declaring bonus or such other things that are prescribed in Companies Act. When you can, because it is the same thing. This is a type of unrealized gain. Just because they want to introduce fair valuation, they have introduced this revaluation model. Otherwise, everyone knows that this is in contravention of the prudence concept. So ideally, if there is increase in revaluation amount, you take it to OCI. But if the asset was earlier it was impaired and you had booked impairment loss in the P&L statement, to that extent you can take it to profit and loss account, and that is not the contravention of prudence concept. If there is a decrease, you debit to P&L. Now you cannot say that this is not unrealized. Array, this is unrealized. It is realized only because there are market indicators that you are going to realize this much amount only. So you debit it to P&L. But if you had earlier revalued this asset with a higher amount, that to that extent you can decrease the revaluation surplus in the OCI which is appearing. Next is useful life. Very important discussion. When you talk about intangible asset useful life, there is a fundamental difference that is happening with AS 26, which is under Indian GAAP. If you see under AS 26, you are not allowed to have asset with indefinite life. Forget indefinite life, it is saying life of intangible asset should not be more than 10 years. This standard says nothing like that. You can have an intangible asset with 30-year life also, right? You can have it with an indefinite life also. But important point to note is I have used the word finite and indefinite, not infinite. You cannot say that life of intangible asset is infinite. How does it make a difference? Both words sound the same only. No. When you are saying that a particular intangible asset is indefinite, it means that we don't know how long the benefits we are going to get from this. So by saying this, you have to test this annually for impairment. When you say infinite, this means that it is going to last forever. You don't have to do impairment testing also. So you cannot use those words like infinite. It is indefinite. Even in the standard also, the wording everywhere very carefully it is written indefinite only. And you can always find this in basis for conclusion of IFRS. All these standards are based from IFRS only. Now talking about useful life, obviously two parts, finite and indefinite, but there is a difference in economic life and legal life. We have an example later on for this. So for finite, what there is estimation required. You have to estimate what is the useful life. You have to estimate the amortization method. You have to estimate the residual value. Then you have to annually review these if there are any changes. If it is an indefinite life intangible asset, the most important part is you have to mandatorily impairment test that. You have to test it two times. If any indication exists, then also you have to test for impairment. And if no indication exists, annually compulsorily you have to perform impairment testing. So even for this, you have to review useful life, which is the meaning of your impairment testing. You have to check whether this continues to be an indefinite or its life has become limited. If there are changes to all these estimate, you have to account as per IND-AS 8 and treat it as a change in accounting estimate, thereby meaning you give it a prospective effect. Now, let us discuss example on economic life versus legal life. I'll give you an example. There is an intangible asset, which is a mining right. So mining right, the government has given you for 20 years. Now, when you are preparing the estimate that what is the coal which is there in this mine, how much time will I take to completely extract all the coal that is there from this mine, you estimated it as 15 years. So legal life is 20 years and economic life. What is economic life? Economic life means till what time you are going to derive future economic benefits from this particular asset. That is your economic life. Standard says whichever is lower that you have to consider. You cannot say that the economic life is 15 years, but legal life is 20 years, so I will amortize it over 20 years. What will happen in last 5 years? You are not having any benefit from this asset, still you are amortizing its cost. So matching concept is not fulfilled if you are doing this. So you have to take lower of economic life and legal life. Going ahead, what is the importance of finite useful life and how to amortize it? So if intangible asset arises from contractual or legal right, it specifically says useful life cannot exceed contractual or legal period, but it can be shorter. We have an example, very good example on this, that how if you have acquired intangible asset which is a contractual one, how its life can be shorter than what is given in the contract. Second, if the right can be renewed, say suppose you acquired an intangible asset with a useful contractual life of 10 years and you can renew it for further 5 years without any cost, then at what amount are you going to amortize it, considering useful life as 10 years or 15 years, because you can renew it without significant cost? You have to amortize it considering useful life as 15 years only, because you are going to renew it and there is not going to be significant cost. So next is the concept of amortization. Very big misconception here. I've seen many people saying, what are the methods available for amortization? That is straight line method, diminishing balance method. Many teachers I have seen, I don't know how many people I have seen, they are saying for intangible assets, you have intangible assets, and for that matter, property, plant and equipment, you have three methods available. Straight line method, diminishing balance method, unit of production method. You have to select from this. Who said? No, you are not given any choice. You have to select the method that reflects pattern of consumption of future economic benefits of that asset. Now, what is the meaning? If the intangible asset that you are going to amortize is such that in the initial years you are going to get major value, and in the last Suppose the useful life is 5 years, you are going to derive significant value in 3 years only. You have to use WDV method. You cannot apply SLM method. It is not demonstrating the pattern. It is the asset is consuming future economic benefits. So very important question arises, which is I have written in the third part. What if the pattern of consuming future economic benefit is based on my revenue? I will give you an example. I am saying that I have an intangible asset, which is the right to collect toll from a toll road. So there is a toll naka. I have the right to collect the people who are passing by. I have the right to collect the toll from them. I am saying that this intangible asset is following the pattern of consumption is its pattern of consumption of future economic benefit is based on the revenue. Why? Because what is the future economic benefit from this asset that I am deriving? It is the revenue that I am generating. So can you use the revenue that is generated as a model for amortizing an intangible asset? You cannot. 98A para of IND-AS 38 states you cannot. There is an irrefutable presumption that such method is inappropriate. However, there is a exception given in para 98C. Now, what is that exception? I will explain it to you with the help of an example. Suppose I have a coal mining right. What the government said to me, you can use this coal mining right only up to the value of 100 million, 100 crore rupees that you achieve by mining this particular mine. In this case, what is the predominant limiting factor? What is the meaning of a limiting factor? For finite useful life intangible asset, there will be something that will be limiting its life. So what is a useful life? You can use this particular asset for this many years only. Here, what is the useful life? It is achievement of a revenue. When this intangible asset is mapped with achievement of a revenue, that when you achieve the revenue of 100 crore, you have to stop using this intangible asset. In those cases, you can use the revenue model also for amortization. So what is the meaning of revenue model? You amortize it in the ratio of revenue, but there is a refutable presumption in 98A. Generally this will not be the case. You have to demonstrate that the example that I given, that is your case where your predominant limiting factor is achievement of a revenue. Only then you can use that model. Otherwise you have to choose from diminishing balance, that is your WDV, SLM or unit of production, but that depends on consumption pattern of that intangible asset. If you cannot determine, I am not able to determine what is the consumption pattern, then you use SLM. Then you are at liberty to use SLM. And the second fundamental difference with property, plant and equipment is here you assume residual value 0. Ordinarily, not every times you assume residual value 0. When you can consider some other value. Generally, you see in property, plant and equipment, you are allowed to consider residual value. In Companies Act also, the schedule 2 says 5% you can consider. No, in intangible asset you cannot do that. It is ordinarily 0. Only when you are able to demonstrate that there is a particular customer who is readily available for buying this asset at this point in time, it will also be available when the useful life is over or maybe halfway there. Only in those cases where there is an active market and you can demonstrate that, you can take residual value something which is a value other than 0. Otherwise you cannot. So the crux of entire discussion remains, if you want to amortize intangible asset, the model should be based on consumption of economic benefits of that particular asset. You cannot use a revenue model. So you can use revenue model only if your intangible asset useful life is mapped to achievement of a revenue, right? Moving forward to another case study. This case study is that a company, this case study is on intangible asset arising from contractual life and its life being shorter from the life that is mentioned in contract. So here there is a company, it imported a machinery of 50 lakh, and for that it also did a contract of purchase of 30 lakh for know-how. Now useful life of this machine is 20 years. For this intangible asset is 10 years and it can be renewed for 5 years without any significant cost. What the company is doing, company is saying that I have acquired this technical know-how specifically in reference to this particular machinery. So by default, the useful life of this know-how also becomes 20 years. But what the standard specifically says, the contractual life that you have defined for a particular intangible asset, it cannot be higher than what is defined in the contract. In our case, it is 10 years. And obviously, yes, you can consider it as 15 years, because we already discussed if you are able to renew without significant cost, then you can consider it for amortization. So you cannot consider a life of what we call as 20 years for this technical know-how amortization. Now again the question is revised: what if subsequently this machinery is impaired and its useful life is reduced to 12 years? Now here there is a concept of economic life and legal life. Here you have legal life for 15 years, but the life of machinery only which you have purchased for this know-how is 12 years. So you have to also reduce that. So what we discussed earlier, that it can be shorter, was the trigger point for this case. It can be shorter if the underlying asset for which you have purchased that particular intangible asset has its useful life lower than the contractual period that is mentioned. So in that cases, you have to consider the useful life of this intangible asset also 12 years. Moving forward to derecognition principle, very much similar to what we have in the property, plant and equipment. So you derecognize an intangible asset on disposal or when no future economic benefits are expected. So essentially its useful life is over. What is meant by no future economic benefits expected? So whatever is the gain or loss, that will be the difference between what amount you are realizing from the sale and the carrying amount prevailing at that date. You book as a profit and loss. This is your realized gain or loss. So here we complete the what we say accounting which is prescribed in the IND-AS 38. Again, let's see. Yes, we have one specific case study on COVID-19. So now it is like आपको बंदूक दे दी, बंदूक में गोली भी डाल के दे दी, मारना भी सिखा दिया, अब मारो इसको COVID-19 को. ठीक है? So now I will explain you what is this case study. So there is this pharmaceutical company and this is going to happen in practical life. This is very much evident. Two things I have to say for COVID-19. First is this case study and second I will say after this. Pharmaceutical company, many companies, like today also we have more than 160 companies which are trying to develop a vaccine. Now in normal parlance we are using the word development of a vaccine. Is it indeed a development of a vaccine? No, it is a research phase. And even if it is a development phase, now some companies are saying that they have gone into phase 3 trials. So they are saying that technical feasibility is established and there is a reasonable, reputable presumption that they are going to discover this vaccine. What all they are saying, but for the first time, those things which are not written in standard as the criteria for development phase, that also we will be required to consider. So in this case, pharmaceutical company has expended amount for development of a vaccine. Whether it can capitalize it as an intangible asset. Question remains, entity needs to assess whether it is a research phase or a development phase. A research phase, then we know we will expense off to P&L, and if it is a development phase, you have to demonstrate that there will be future economic benefits. If yes, only then you capitalize. Now, what are factors that you will consider? We earlier have seen pirate, like the probability of future economic benefits, intention, ability. No, here there are some other factors that you have to consider. What are those other factors? You are showing to me all the parameters in the standard which are given for development phase are satisfied for my company. So I can capitalize this cost. I am telling to you, what about the competitors? Competitors, if they bring the vaccine before you, then what is the your all research has gone redundant, or maybe then you have to fight. You have to fight if somebody medical institute is tying up with you for this vaccine or not, right? So what factors you have to consider is the position of competitor. Second thing is price restriction. Suppose in near future your vaccine is already clinical trials are completed. Now you are submitting it at international level for taking this registration and all. The prices of this particular vaccine are going to be restricted. They are going to be restricted for obvious reason that this is a global level pandemic and not everyone can afford whatever premium pricing that you are going to do. So it is going to be regulated by the government. So in deriving the future economic benefits, you have to consider those price restrictions also. And again, in the third case, international registration are going to take time. So what all projections that you apply, you have to consider the rule of price control, like at what point in time the frequency of arising cash flows from this particular thing that you are showing as a future economic benefit, you need to consider rules for price control for that. So all these things you have to consider. Second, what is the specific impact of intangible asset due to this COVID situation? That is on impairment testing. I will give you an example. There are two types of asset where I am required to test impairment annually. First is intangible asset which is not available for use. What is this? This is in process research which we have acquired in a business combination. Second is intangible asset with indefinite useful life. For these two, we have to check impairment annually. Now, I cannot do all the impairment testing as on 31st March. I have a lot of activities in respect of financial reporting that I have to do on 31st March. I cannot do all the things on 31st March. So the standard does not say you have to do on 31st March. It says you have to do annually. So I am following the practice of testing impairment on 31st December. Since a long years, I am always testing impairment for this indefinite useful life intangible asset on 31 December. This particular year, I already did impairment testing on 31 December and it was indefinite life only. But because of COVID situation, you again have to perform the impairment testing on 31st March because of the specific indicators that this global level pandemic has given. So like with this, we have the completion of our Indian accounting standards on intangible assets. And if you have any queries, if you can ask me right now, or you can always reach out to me at my contact number or my email address. So now over to the host.
Uh, Thank you, Vrishabh ji, for your wonderful deliberation. And आपने properly everything you have covered in detail. Priyanka ji, any issue you want to discuss? Otherwise, we can close the meeting. Mute.
You are on mute.
Priyanka, you are
You are on
mute.
mute.
Priyanka,
So sorry. So, sir, there are no queries from viewers, and I also don't have any query. But the webinar was so amazing, and I'm sure that our viewers must have learned so much from this today's webinar, and they must have got clarity on IND-AS 38. So, thank you so much, Rishabh ji, for this amazing deliberation. And today's webinar was amazing. And but we haven't received any query from any viewers.
Sure. No
thank you,
issue.
Rishabh ji. So we
Yeah.
would
So I
like to
think
close
we
here.
can conclude
And
this
thank
session
you.
today.
Yes.
Ji,
Thank
ji
you so
Priyanka
much.
ji, we can conclude the session. Thank you very much. Very wonderful
Thank you, viewers.
deliberation.
Thank you